Are you still bullish uranium? And if so, what is your bullish case?
Sure. Well, actually, I'm more bullish than when I made that call.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a fantastic discussion lined up today that I am so excited about. The Fed seems trapped between lowering rates and setting off a new round of massive inflation and raising rates and pushing us into a hard landing. And clearly, the current 5.25% interest rates is not restrictive enough as inflation has been ticking up lately. So they're truly in a box. What does this situation mean for the metals and the miners? And is the supply and demand picture for uranium still as incredible as it was just a few months ago? To discuss all of this and more, we're fortunate to have with us Lobo Tiggre, founder of the Independent Speculator. Lobo was a protege of the legendary investor Doug Casey at Casey Research for almost 14 years. He's been in the mining and investment industry for multiple decades, and his journeys have taken him to mines in more than 66 countries. And the average current realized gain of all trades that he has shared through the years through his newsletter, The Independent Speculator, has achieved an astounding 54.8%. I'm very much looking forward to this discussion today. Lobo, thank you for joining me.
Well, thank you, Gary, for the kind introduction. And I got to just jump in right away. The one thing you didn't mention in that setup is it's an election year.
Yes,
and we've got, we are recording right before Fed Day, right? And we've got 3 dots on the dot plot, and, and March is off the table. And so how many Fed meetings does that leave? It's a really interesting context.
It's a really interesting context, really interesting time. Everybody's been sitting here for the last year and a half believing that at any time they're going to be lowering interest rates and off to the races, but that is just not the case.
Yeah, it's one of those things like, well, nobody could have seen that coming. Well, sorry, anybody could have seen that coming who didn't have a political bias. So sure, was 9% sustainable? Probably not without more money printing. But that inflation would be sticky. They're going to tell you, oh, nobody saw that coming. But of course we saw it coming. Everybody knew that was coming. I think even the Fed knew it was coming, but they couldn't say it. And now here we are. It's stuck at, plus or minus 3%, given which massage number you want to look at.
Right.
50% above the target. And you can say, well, who cares? 50% above the target. There's all kinds of cheerleaders out there saying, just move the goalpost. Just move the goalpost. But I think even the Fed understands that if they move the goalpost, they lose credibility. And by the way, sorry to wax rhapsodic, but when we say lose credibility, it's not you and me or the people we meet at the mom and pop coin shop around the corner. We don't, believe anything the Fed says already anyway. When we worry about the Fed losing credibility, what we mean is that the markets won't pay attention to what the Fed is saying anymore. Particularly the bond market vigilantes will run the show instead of the Fed, which really is dangerous in a central bank distorted economy. Maybe dangerous or great if you want to see the show collapse and come to an end and free markets reign. But if that happens, the painful transition will be one for the record books.
Dangerous in the sense, and I would agree, dangerous in the sense that the Fed, if the Fed loses control, they lose control over it all. The narrative, the tight grip that they've had, everything. They lose control over everything. So let's kick this conversation off with uranium. Several months ago, you began stating that you believe that uranium was due for a consolidation period and a pullback, that it got too far extended and ahead of itself, and that there was going to be some profit taking, and this was going to take a little bit of time. You took actually a lot of flack for that call, but it's proved to be extremely on point. Are you still bullish uranium? And if so, what is your bullish case?
Sure. Well, actually, I'm more bullish than when I made that call. I mean, uranium went vertical pretty much, and it made sense to say, well, gee, nothing goes straight up forever. I wasn't the only one who made that call, but I was rude enough to do it on the uranium panel at the Vancouver Investment Conference.
Right.
And, my talk in Vancouver when uranium was very much the buzz of the conference was reality check. So yeah, I took a lot of heat for that. And the funny thing is that now I'm taking heat for saying that I took heat for that. And okay, I got to pat myself on the back a little bit, not just to pat myself on the back, because there's a learning opportunity here.
Yeah.
Right? All those cheerleaders, all those, oh, it's going straight to the moon. Yeah, okay, you can get mad at me if you want to for saying otherwise, but the important thing is to learn from this experience so you don't get wiped out again or miss an opportunity, which answers your question. I am more bullish than I was before. The issues that we've had since then, since it was obvious that some correction was coming, are very, very bullish on the supply constraint side. We've got Kazatomprom, the largest and lowest cost producer in the world, is really worth emphasizing. This isn't just any company. I generally in my interviews avoid making company specific comments because that's what my paying customers pay me for. But in this case, I'm talking about the market, and this is a big market mover, the biggest. And also, if prices are determined at the margin, and this is the lowest cost producer, its marginal changes are very impactful for the uranium market. So here we have Kazatomprom not only slashing its guidance, they failed to actually deliver. And last year, they not only didn't deliver on guidance, they delivered less uranium than expected. This year, they've slashed their guidance. And just now, last Friday, a couple days ago, as you and I speak, their latest financial results include, some optimistic language, but the press release includes the word uncertainties 7 times in one, in one financial report. And of particular note, in relevance to your question, is that these uncertainties aren't just market uncertainties. The uncertainties are specifically due to their guidance. They're saying that we still expect to produce a little bit more this year than last year, which might put them on par for 2022. Not some big swamping of the market. But there's great uncertainty about that too. And the last time they talked about great uncertainties, they disappointed. So I think it's not just going out on a limb. I think it's reasonable to speculate that Kazatomprom will underperform again. And that is a huge, not just marginal, but the marginal player in this market. So that's huge. Meanwhile, we've got Cameco, the other big boy on the block, saying, oh, we're going to ramp up to 18 million pounds at our 2 biggest mines. Everything's going to be great. Meanwhile, reporting that things have gone not badly, but they're off schedule. There have been some difficulties. So it is at the least prudent to be cautious about assuming that Cameco will be able to deliver as advertised. And even if they do, you still have Kazatomprom not likely to do so. And so in this market where in 2024, it was looking pretty finely balanced. Secondary supply might have pushed the market into surplus this year. But now with the big boys either struggling or in trouble, I think the market remains undersupplied, and that's very bullish. So I'm not saying therefore it's off to the races. Obviously, the correction is still going. As you and I speak, the latest broker price index was down $1. When you're close to $100, that's not such a big deal as it was when it was $18, but it's still down $1. So correction's not over. I absolutely see this as a spectacular buying opportunity. Anybody who's kicking themselves for having missed the big rally last year should be buying, I think, right now. I think could it go lower? Of course it could. Will it? Who knows? Nobody knows. I don't know. You don't know. Nobody knows. But it's already corrected enough, and there are buyers in the market at this level. And as per all I've just been saying, I think the outlook for 2024 is much better than I expected before. So uranium is the only thing, or uranium stocks, the only thing on my shopping list right now.
Interesting. So, Lobo, last week, a U.S. delegation met with Nigerian officials, and they were expressing concerns over Niger's potential relationships with both Russia and Iran, as well as the status of the U.S. forces in the country. What impact, if any, on uranium supply and prices do you see the issues in Niger having?
Well, it's interesting that you asked about prices rather than the companies in Niger that have been whacked again. I think there's an educational opportunity there that I just can't resist pointing out.
Please.
These stocks got whacked on the news of the coup, rightly so. And then they came back, and optimism reigns supreme here of, the coup really doesn't have anything to do with uranium, which it doesn't necessarily. And this latest action By the way, you didn't mention that the the latest action is YouTube full of gun-toting guys on motorcycles chasing U.S. soldiers out of their army bases and stuff. So hardly very encouraging about Niger.
Right.
The educational opportunity here is that this sort of political risk, not just uranium, it can be gold, copper, anywhere in the world, is really, really important. And you can't underestimate that even if it doesn't have anything to do with your favorite commodity, country risk can affect you anyway. All you need is a few expats getting caught in the crossfires because, those brown people over there don't matter. Of course they do. But if you look at the markets, what matters is when white people from Canada or London get shot or kidnapped or something, you just can't rule that risk out. And if it happens, you experience the elevator down part of the market, right? So it's really important, I think, to not underestimate political risk in general, and especially when there's this country-specific thing. So beware of buying this dip.
Can I interrupt you for a moment?
Sure.
Do you see in those events rotations happening, staying in the same commodity sector, just rotating?
Oh, absolutely. Yes.
Yeah.
Right. So if anything, to get back to your first question, the whole situation in Niger is bullish for uranium prices. It's not Kazatomprom, right? It's not Canada, but it's a significant producer. And again, prices are always determined at the margin. You take those pounds that Niger would have delivered off the market, and suddenly, that marginal dollar goes chasing after higher priced pounds elsewhere. Now, it's not actually a foregone conclusion that those pounds will leave the market. The Nigerians, or however we properly pronounce that, they might happily sell to the Russians, who will sell to the Chinese, who won't buy from Canada. Uranium is a fungible commodity. So, there are some bulls out there saying, oh, yes, this is yet another reason for uranium to go straight to the moon. And I'm not quite in that camp. But even if uranium is fungible, there are extra costs involved in all this. There are delays. And again, the not again on my part, but a well-known point is that the utilities don't buy. They contract from the mines, but that's not the enriched uranium that they put in their fuel rods. So this whole fuel cycle takes a couple of years. You disrupt that, and it's a problem. So I don't know. I can't give you a number, Gary, on how much this will boost uranium prices, but it certainly is a boost or a plus or another tailwind for the commodity. As for where you're going to speculate, then I think I've made my position clear on political risk. And coup d'etats are they're never good news. You never know how that's going to play out.
Yeah, fair. So, excuse me, in the last uranium bull run, the price fell 8 or 9 times between 20 and 50% on the way up from $8 a pound up to like 140. Does your analysis point to a similar scenario playing out this time in terms of a large price movement over time with many pullbacks and consolidations and profit taking along the way?
Well, first, I'm not a technical analyst, so I'm cautious about looking in the rearview mirror through that tool, even though it can be at times very useful. Second, I do think there are fundamental differences in the market now. There was no Kazatomprom at the time, or it was just getting started at the time. And I think also, it was starting from a lower base. The market was different. We had the megatons to megawatts program earlier in that cycle. And that's gone, right? So just a very different market now. We also have the new Cold War, disruption of supplies, potentially bigger disruptions. If Congress in its infinite wisdom bans enriched uranium from Russia, that causes an instant and large scale disruption.
Plus a major player in China that we didn't have.
Yes, right.
Yeah.
Right. Which wasn't, they're building scores of the things now, right? So it's just a very different marketplace. And by the way, so we had all that chop earlier on, but when we got into that great big spike up into 2007, there was barely any looking back.
Yeah.
And so this is dangerous because people have applied that this time. Like this happened in 2021. People said, oh, well, when that thing got going in 2007, there was no stopping it before it reached the moon, or at least Lagrange 5, right? So, and that proved wrong, right? We didn't go straight to the moon. And people were starting to say that. I think this is part of why people were so angry at me when I said last fall, when it started going vertical, that it was unlikely to pull a 2007 style spike. People wanted to believe that was true. And if it was true, we wouldn't get these pullbacks that you're asking about. The fact of, the technical analysis fact of the current market is that we've been very much in a 2 steps forward, 1 step backward market since late 2015, 2016. It's that pattern hasn't been broken yet in this market. That pattern gave me confidence in making my correction call and stridently in December when things really started going vertical. Yeah. So my answer to your question now is that we're in a step back, absolute buying opportunity. And I expect the next step forward to be very rewarding. But I don't see a 2007 style spike unless the powers that be get really crazy and a new iron curtain really disrupts the market, which is possible. Or there's another unless. Or if this becomes, with the green mantra, now the flavor of the day, if the hodlers decide this is the next cool thing to pile in on, because it's the sort of thing that's such a tiny market that it lends itself to a Wall Street bets type squeeze. Yeah. I'm not promising any of this, or even forecasting it, but I'm just saying if that happens, uranium stock could be like GameStop or meme stocks, right? They could go nuts because there's so few of them that really have the goods. So, these are if things, but a more when outlook is just continuing 2 steps forward, 2 steps back. I think we're in a step back, which means loading up for the next step forward.
I think that's real positive, though, for more of a medium to long-term investment versus a shoot the moon and try to time it to get out before,
it's volatile. But if you look at the last 5-6 years, that is a steady, volatile, but steady climb, which is much better than a hyperbolic climb. And I think that's more sustainable. It's better for the business, the actual business of mining, right? And how do you price your projects? How do you make your construction decisions when prices are going like this, right? So, yeah, but nobody wants to hear steady as she goes. People want to hear blast off, right?
So as long as we stay in this trend that you have identified since 2015, am I to assume that you're seeing every dip as an opportunity to buy? Whether that be okay.
Yeah. And that's a fundamental call until the fundamentals change, until we see mining supply catch up with demand, which I don't think happens before the 2030s. And even that assumes that SMRs don't add a whole new set of demand, right? Nobody's models right now even include SMRs.
Yeah, it's hard to
They're
know.
the small modular reactors for anybody that know. So yeah, it's a pretty, I see this as a multi-decade bull on the order of copper.
As long as we don't have that spike.
And if we don't have, nuclear bulls hate it when I say this, but it's something that every investor in the space should realize. If we don't have a major Chernobyl scale event, and I use that word very specifically because I actually am not sure that another Fukushima would derail it this time. The panic on the climate change side is so severe that, we've got dozens of countries now promising at COP28 that they're going to triple their nuclear power generation.
It's amazing.
And the fact of the matter is, tragic as the Fukushima disaster was, it was the tsunami that killed people, not radiation from the plant. Right. So I'm not even sure that something like that would derail this, because there's people who think we're all going to die in 12 years if we don't stop oil now. Right. So and they vote. Right. So I do think it would take something on the scale of a Chernobyl, which now people are starting to get comfortable with. It's not nuclear energy. It was the Soviets. They were stupid. Anybody who watched that wonderful Netflix series on Chernobyl, which I do recommend, some nuclear bulls say, oh, it's anti-nuclear, but I don't think it's anti-nuclear at all. It's anti-Soviet. Like, the problem there was an unwillingness to face the truth, which made things much worse, if not made the accident happen in the first place. Right. So I think people are kind of getting comfortable with that. If we had a Chernobyl scale event in the United States, forget it. It's the literal nuclear winter for uranium investments, going forward. Even coal would become more. Greta Thunberg might prefer coal to uranium at that point.
Oh boy. Well, so listening to you talk about about people getting more comfortable, the cost of energy, the bifurcation around the world, with energy supplies, it makes sense, and the need for increase of energy, as everything is getting electrified, as India is raising a population up to the middle class and other countries, it makes sense that the need for energy is just not slowing down, yet the challenge to get the supplies to the market is increasing. So
Absolutely.
so the need for um, really an all hands on deck and an increase in nuclear just makes total sense. So, Lobo, many successful investment and asset managers are investing in uranium for sure, but only owning the metal. They're doing so through the Sprott Physical Uranium Trust or through Yellowcake, because in their words, owning the miners brings too much risk. What's your perspective on risk associated with the uranium miners?
Well, they're absolutely right, but risk brings leverage. The whole reason to bother with these, as my mentor Doug Casey used to always call them, these crappy junior mining stocks, is because they bring you hockey stick potential. If you're retired on a fixed income and you cannot afford to lose your nest egg, but you're very bullish on uranium, like you get the thesis, so you want some exposure, then sure, the funds that give you a proxy for stuffing uranium under your mattress, which I don't recommend, right? That makes perfect sense. I have no disagreement with that at all. Um, but if you're in the wealth creation rather than preservation stage of your life, you want gains. I'm in this. My
Yeah.
job for my clients is to look for the next hockey stick
Yeah.
stock chart. Right? So that's not going to happen with the funds. I mean, I guess if spot happens to spike up, possibly, but if that happens, the stocks will give you more leverage. And
Yeah.
if you're in a safety play, will you sell when the underlying commodity spikes? Probably not. You'll ride it
That's a
out.
good
You're not
question.
in the
Yeah.
mentality of speculation and profit taking. You're betting on this long-term trend. So you're probably not going to benefit from a spike in the commodity itself that much as a conservative investor.
Yeah.
So if you're, if you want some leverage, but you're kind of risk averse, then the large producers make sense. And I don't give free stock tips in interviews, but there's kind of only one in the West. You know who I mean? If you want more leverage, then the up and coming junior producers, the developers, the pre-production sweet spot is my absolute favorite place for speculation. And clearly, the uranium prices, despite the correction, are above the incentive level now. And everybody who's got a low cost project or mothball production, they're all racing to get back into the market right now.
Mm-hmm.
So there are obvious contenders in this space for extra leverage to the commodity. I guess, one final point is early stage moose pasture is not really of interest to me. And
Fair
if
enough.
if uranium goes nuts, they'll probably, rising tide will lift all ships. But
Yeah.
if it goes in this, volatile pattern, this more steady pattern, I'm not sure that particularly your pre-discovery plays, are going to make it this cycle. Whereas the ones that actually have already got the discovery and they're defining it, they're working on their first economic study or something like that, they have better chances. Success in progress on discovery is different from betting on somebody that hadn't made a discovery yet.
Mm-hmm.
And that's another one of my favorite places to speculate.
So I recently heard this amazing stat about cloud services and artificial intelligence. Currently, data centers hosting cloud services worldwide consume more energy than most countries. And globally, by next year, 2025, they're projected to consume 20% of global electricity and emit up to 5.5% of the world's carbon emissions. Global energy trade has been a bit upended since Russian invasion of Ukraine. Global energy investment has been down for years. India and other countries are racing to bring their poverty into the middle class. Western nations are looking to electrify literally everything without grids that could even support what they currently have. So, in your opinion or your analysis, what role is nuclear going to be playing in this new world, this new mix?
Well, the short answer is indispensable. I think the way you've set it up, it makes it pretty obvious. Not a whole lot for me to say. But let me jump in on the AI thing, because that's such a buzzword. It's such a hyped up factor now that I hate for anybody to make a mistake. This, drinking the Kool-Aid just happens. It seems like every time there's something hyped up on Wall Street, people get hurt drinking the Kool-Aid. I'm not saying AI isn't real. Actually, I think it's a very significant factor, and in the near term, like I do think it will be an enormous creativity and productivity enhancer that will be a net positive for the human condition. Just no question in my mind. It's going to make us all better off. But the transition, the disruption here is huge. People compare this to the advent of the internet. The internet didn't really unemploy swaths of people. This is more like the invention of the steam engine or something. There are a lot of jobs that are going away now. There are whole classes of jobs that went away last year. And as the general technology gets, modified, apps come out that solve problems for different businesses, those jobs are going away now, this year. This is happening. So the creative destruction, I'm an Austrian economics type. I believe in creative destruction, emphasis on the creative is the part we want, not the destruction. But the destruction is the price you pay. And the destruction of jobs before the new enhanced creativity creates the new jobs, I think is a big economic factor that everybody should pay attention to. Now, that doesn't mean that NVIDIA stock needs to, deserves to go up a millionfold, or, I don't know where NVIDIA goes. But I'm just saying, beware of just jumping on everything that has AI in it. There are mining companies that are putting AI in their press releases. Oh, we're using AI to look for drill targets and so on. I give that zero credit. If somebody puts AI in their press release as a mining company, I would not buy on that basis. If anything, it's a red flag. It looks like hype and piddling the Kool-Aid. So where I'm going with this, I guess, is I'm not an energy grid engineer and I'm not an AI programmer, right? So I can't address the technologies. I understand as a layperson that a search on Google uses X amount of electricity and an AI search uses like 1,000x, whatever it is, the microsecond for a Google search versus having these large language models, do all the magic pixie dust stuff they do. It's like not an order of magnitude, but an order of magnitude's energy price difference. Mm-hmm. That being the case, in the power, it's like an arms race. If you decide, AI is too expensive for us, we're not going to go there. You are surrendering to the people who do. Mm-hmm. And the people who do include Russia and China. Exactly. Right? There's just no way. Nobody's going to surrender this arms race. That means energy consumption. If those figures, those orders of magnitude are exaggerations and all AI hype, and it's not going to be like that. Even if, let's say, NVIDIA's new chip, which, by the way, boasts a lot more energy efficiency, right? Just yesterday, what's his name from NVIDIA came out with his shiny new AI chip, which is a big slash in electricity consumption. Even if each chip uses less, but you're using 100 more chips, right? The consumption is going to be there. I don't know what the number is, Gary. I don't know how much the increase is going to be. Maybe it's not as much as some of the hyped up bulls are saying, but it's going to be there. It's going to be real. And you know what? Even without it, the other factors that you pointed out, India wanting to move its lower class into the middle class, as China has done so spectacularly. And both of those countries still looking to advance. And just the fact that the world's population is still growing. All of this is bullish for energy consumption while we're trying to just stop oil and never mind coal, right? So, even if you love windmills and solar panels, pave the planet with solar panels, they only work part-time. You have to have 24/7, 365 baseload power. Yes. That's not going to be coal, and ultimately not natural gas, which does emit carbon. Even if it's clean natural gas, it does put carbon in the atmosphere. Really, nuclear is your only choice.